Hi, today is Monday 27th. This is the weekly recap for our trades. And before I start, I would like to review the market because it has gapped down substantially over the weekend. And this is the picture today. I am using the CFD, which is a good proxy for SPX. And this one is quoted as early as the European morning session. So we have a better picture of what's going on. I have plotted the fib pattern from early Jan. I could go exactly like on the SPX, also plot the one from December or even the one from October, but let's focus on this immediate pattern from early Jan when the market dipped to 31.82, and considering the high on 33.40 or there around, we have broken the pivot level, which was the first salient fib, 32.79, and it looks like it has broken the second one, 32.60, and it's aiming for 32.40. This one could hold, otherwise it will maybe, if this one breaks, it will probably go to a support level, so basically 3200. The market is hugely oversold, waiting to bounce back. If we look at the Bollinger Bands, and there's of course a potential for mini reversal as soon as we see a green bar, so we need to see some immediate short squeeze to then return to probably around 3280. So at this point I would say that we have to wait for the fall to complete, buyers to come back. They're probably kind of stunned at the moment because there was some complacency. The VIX was in the 13-14 on Friday, so it's not exactly a vol shock, but it is definitely something that is unsettling the market. And I would not be surprised if the market goes to maybe 32.20 at some point, because that would be back to this range 32.20 to 32.60. On my SPX outlook that I recorded over the weekend, I mentioned that it could be a wider range, 3260 to 3340, 3360, and of course that pivot line is a key price level to decide where the market will try and stabilize. So it has left the upper range and it's definitely probably going to stay in the lower range for a while. So let's see how the market develops after the open. Hopefully the 32.40 will hold and we should see then a bounce back to maybe all the way to 32.80. Okay, back to the risk graphs, and this is the SPX Rhino for February reg, and as we could maybe expect, there would be some flattening. Vega was minimal around the 3300, so now let's assume that this is not exactly correct because one does not plot the underlying as we speak. So market is more around here, but I suppose the Greeks are more or less okay. So the delta is still flattish, and I would suggest that we suspend the, because we have already trimmed down the lower part, which would have definitely brought more negative Vega and would have probably made the T plus zero sink further. I mean, delta is still flat, probably around here, and we can assume that we are still in a fairly safe area. So I may tweak the trade a little, but I will not take it as an emergency measure as we speak. Delta is flat. We are closer to the tent and we have more delta than we used to have. So I don't think I will do anything. And if I was to carry on trimming and simplifying the trade, I will probably put something like this just to restore some negative delta. So that's something that we can do. This will cost a bit. Expiration line will still be around zero. So we could still make about 1%, maybe a bit more. So this is the only adjustment, basically capital reduction to next to nothing to make space for an April entry at a very good price. I don't think this is necessary, so this is definitely not the first thing I will try and do. As you can see, even if delta has gone flattish to borderline positive, the profit line is about the same. We were about the same level on Friday. this is the short brokering butterfly that I have in mind. Minus 2925, 3025, 3075. Okay. And of course it will cost a little bit, but I wouldn't try and push the shorts higher. When the market looks a little bit hesitant, we're not here to really try and tune the trade to make money. I mean, this is conservative enough. We would have very little remaining risk on the downside. So this is the only adjustment I would be looking at. I think it would cost less than $1. Yeah, 95 cents, and maybe after an hour into the market I will try and do that. Now let's look at Feb BTB. This one didn't have as this one is still doing fairly okay. I think for as far as BTB is concerned, I may look at really simplifying the trade all the way to closing it down. I mean, there's not much to expect from this trade. I'd be happy with just breaking even on this trade. So there are only 5 strikes left. Maybe I will just try and minimize something like this. Also a short broken butterfly. This one would cost a little bit more, but as you can see, that would give us a much better outlook on the downside. So maybe just something like this with virtually no risk left, just and reducing capital usage to $5,000. So this would be something that could be done on the way to closing the trade. So those trades do not require immediate attention. Now let's have a look at March. March probably doesn't need either because they've been managed pretty conservatively. So of course T+0 has sunk. When we have a shock to the market, and at this point in time after 50-60T or sometimes 40-90T, the trade loses its initial resilience. It becomes a slightly more sensitive to turbulences. I often use the metaphor of flying an aircraft. This trade is still doing okay. Delta is around 6, but because of the Vega exposure now and the PDS side of our combos weakening, of course the PCS side goes slightly against us. So yes, what can we do? I would say that if we stick to rules, there's nothing to do. We are not below the shortest puts. The delta is still flattish enough. So the only layer that we could consider when it's just a fairly gentle tuning would be to either place a CCS safe enough around 200 points above the market. That would naturally cut the delta in half. And if you are a little bit more nervous about the market falling further, then it could be accompanied by a PDS. So that would be technically what we call a risk reversal. So the risk reversal can be, depending on where you want to place the PDS, it can be here. So that wouldn't cost much. It will flatten delta. This would be probably the simplest way to do it. We even reduce capital usage at the same time. So this would be either a risk reversal or an outright CCS for this trade. I do believe that our shorts are still about 100 points lower. I think it's reasonable to consider just a CCS, but probably for the class to be on the safe side, I will probably go for a risk reversal adjustment. So that will be 30.50, 30.75, 30.40, 34.50, 34.75. Now the B2B trade that is supposed to stick to the standard guidelines. This one has tiny bit less positive delta, and the Vega exposure is not as bad. And as a matter of fact, I think it's doing a little bit better than Reg at this time. That said, when we placed the trade initially, if you remember, the shortest puts are 31.77. So I would reckon that a risk reversal would also make sense. So let's have a look what it would be doing if I do the same type or similar. That would be keeping a delta flat. The Vega exposure would be slightly increased because of the CCS, but that is probably acceptable enough. So we would have a T+0 that would be okay for a while. But of course, you must assume that the SPX right now is below 3250. So I will confirm the strikes after the open when I have the proper curves, but I would say that there's no need to go further than that. The reason why I am not overly nervous about this is that I still believe, if you remember what I just showed on the charts, that there will be a bounce back. As soon as there's some stabilization, the mean reversal should kick in. So I will probably, and as you see, there's no delta emergency, so there's probably no need to act swiftly just after the open. That's it for our trades. I may consider an April entry, which I will describe on Slack. And it is in the same for the baby rhino. Since I publish these videos as public on YouTube, I will discuss the baby rhino, that weekly trade on Slack only. Okay, that's it for now, and see you a bit later on Slack at the open. Bye for now.